Hello traders, Chris Capri, secondskiesforex.com. I have another video with a live price action trade setup on the Aussie dollar. As you can see, I'm currently in this trade here up about 127 pips roughly at this moment. So in this video, I'm going to cover my reasons for getting in the trade, my entry location, my stop loss placement, my take profit, why I used all these, and then I'm also going to talk about going for plus 2R versus larger trades, how long you should be holding these, and why. So let's get into this here. I'm going to briefly zoom back to the daily time frame to kind of establish some context. We had a very large bear move from 94 down to sub 87, and then it formed a corrective or rebalancing phase at the lows. After a large trend, if the market forms a corrective move or rebalancing phase at the lows of a bear trend or at the highs of a bear trend, that usually means the next leg is down. And so I was looking for a chance to get short in the market, and the market offered me a really good location. So after hitting the top of the range, the market sold off, found a brief bounce about 87.55, slammed through it, and then treated this as resistance. So this is called a roll reversal level, where the roll of the level flips from support to resistance or resistance to support. And so being that the market had kind of pegged this as a roll reversal level, this was kind of my idea for a trade idea and trade location. I felt like the market would hold this on a bounce and that I'd want to sell here, and therefore, selling with the intention that the market will break the lows of the range and therefore open up a lot more profit. So my entry location was just a little bit below the level. I'll admit it probably wasn't the optimal entry, the perfect entry. I got in at 87.41, and the roll reversal level, the most probable, I guess, best way you could draw it would be about 87.54, 55. So I got in a few pips below that, originally anticipating that sellers would emerge in a little bit below it. Why is that? Because the first time we hit it, it sold off aggressively. The second time, we didn't even quite make it above the level. It sold off just before that. So I was anticipating that the market might do that. Initially, that theory was correct, but the market ended up going back to it anyways. So a good entry, but not the ideal entry. Had I been able to get in here, this would have increased my R tremendously because I already had a very small stop. So my stop loss is at 87.71, which is a 30-point stop. And the reason is because the reason why I'm getting in this trade is the level. I feel that the level should hold, therefore that's where I'm getting in. That's the reason I'm getting in. Therefore, that should be the reason I'm getting out of the trade. So I don't really need a huge stop loss above this level here. So I literally gave it about another 15, 16 pips. And that would have allowed for the market to penetrate into this lows here or this lows here. Still giving it, even here, with giving it a little bit of a room to work with. So that was my reason for the stop loss placement. Now my target is much lower than the prior range. It's actually down here about 83.54. Why did I choose this target? Well, being that we've broken the range, I anticipated that some stops would be tripped and that we'd probably actually have a large continuation move from here. So where am I looking for the market to go? I'm actually looking for the market to go at least down to here. I do think the market could stop right around here, which is about just around 86. Of course, being that we have the big figure at 85, the market could stop there as well. And so that's a possibility that the market will slow down there. I don't anticipate that we'll have heavy buying interest once we get below 86. So I think at 85, it'll be more like profit taking. But with the possibility that there is a strong bounce, I am open to exiting the market there at that point. Now, my target is down here, again at 83.54. That's because of this bounce here and some resistance here. It's quite possible the market might make it down to about 80.76, where this last bull leg started. And so if the market slams through 85 pretty aggressively, pretty impulsively, then I'll lift the limit and move it down to here, anticipating that it'll probably eat through any bids that are here, maybe after a small correction. And so that will open up the profit potential tremendously on this one here. So now going back to now that we've covered the take profit mechanism, heading back to the 1 hour chart here. So with a 30-point stop and a target of 83.54. That means that my take profit is set at plus 387 pips with the 30-point stop. So when you start doing the math, that comes out to a plus 12.9R, just under 13R. Now, this leads into the second part of what I wanted to talk about. So if you are traditionally targeting a plus 2R, there really is no reason you should be in a trade longer than a day. Why is that? Because plus 2R trades happen every single day. Case in point, this trade right here. If I wanted to target plus 2R with a 30-point stop, my take profit would have been somewhere right around here. So I would have hit that within less than a day. Plus 2R targets can be hit every single day. They are available every day. These types of trades are done every day. If you are in a trade for 5, 6, 7 days, 1 week, 2 weeks, and you're still only targeting plus 2R, then what does that mean? It means a couple things. It means that minimally, either your entry location or your stop loss placement is poor and imprecise and needs adjustment. Again, because plus 2R trades happen every day, if it takes you days on end, then that means that either your entry location wasn't optimal or your stop loss was too big to get to a plus 2R target. So that means that you have to start working on getting more precise stop loss locations and more precise entry locations. Case in point also, if I had been able to get another 14 points higher on my entry, that would have afforded me about a roughly 16, 17 point stop. So that would have actually then taken my stop loss, cut it virtually in half, and thus increased my R tremendously. So by getting a more precise entry location, by getting a tighter stop loss, then you should be able to grab a plus 2R on a daily basis. The only reason why you should be holding a trade for 5 days, a week, 2 weeks on end is if you have a high R trade, a plus 5, a plus 6, a 7, a 10, a 12. Those are reasons to stay in trades for long periods of time, not for a simple 2R. Again, if you are targeting 2R and you find yourself consistently in trades for days and days and days, maybe over a weekend, maybe over 2 weekends, then your entry location was imprecise and your stop loss location needs work. It needs to actually be cut down and you need a little more precision around that. So I hope you found that last tidbit useful in terms of holding times for trades, in terms of the size profit available for trade. I hope you also found it useful into an insight as to how I like to make my trades, how I actually use and manage my stop loss, and what kind of targets I look for as well. So if you'd like to learn to make trades like this, if you'd like to see and spot opportunities just like this where you can make plus 5, right now I'm already up over plus 4R, but like yourself, possible plus 5, plus 7, plus 12R, well then check out my price action course where I teach these exact same methods. I teach you how to find trades just like this, and then you can start making trades just like this. So with that being said, I hope you enjoyed this video. Please comment in the comment section below, subscribe to our channel, and make sure to check out our site. I bid you all adieu. Good luck trading, everyone. Or just under 139 before we see some additional selling pressure. So my target is actually 139 on this one, just under 139. That's about a 220 point target with a 30 point stop. So roughly, actually it's just under 220, about 210. Instead, what I'm looking for from the market is for those rejections to actually get higher or hold above the level. If it isn't holding above the level and stays below it, then I really don't want to be in the trade because the level is really the reason why I want to be in this trade. So because I wasn't using a